Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant. Psalm chapter 73, verse 26. My flesh and my heart may fail, but God is the strength of my heart and my portion forever. Psalm chapter 27, verse 1. The Lord is my light and my salvation. Whom shall I fear? The Lord is the stronghold of my life. Of whom shall I be afraid? Habakkuk chapter 3, verse 19. God, the Lord, is my strength. He makes my feet like the deer's. He makes me tread on my high places. To the choir master with stringed instruments.
Good morning, everybody. Let me know if you guys can see everything okay, hear everything okay. Can y'all hear music in the background? I'm gonna try this again. Try this again, see if we can figure this out. Possibly. TV. I have you on my TV, completely different looking view. Oh, nice. Much bigger, that's for sure. Music's low? Okay, good. I kind of want it to be low, just in the background. But yeah, if it gets too loud or distracting and, you want me to turn it down, I could just turn it off. But yeah, so just let me know. Let me double check some things. How's your guys' weekend going so far? Good? Appreciate y'all hopping on. Of course, today we're going to talk about the regular stuff we do. All the different assets that influence what it is that we're going to do. Different elements, weekly forecast, bonds, yields, DXY, indices, currencies, right? All that beautiful stuff. And if we got time, we could look at anything else you guys want. But yeah. So I just want to give you guys another reminder. Let me see. Tony said, "Chris, it's insane. You marked the whole NQ drop." Yep. That's not new, Tony. Think about it as soprano voice, right? Tony, it's not new, Tony. It's awesome that you guys get to see this stuff. Tony said, I've seen a lot of streamers get wrecked while the bias stayed exactly in line with what we're looking at, right? We're not phased, surprised, or caught off guard by the market. And if we are uneasy about certain stuff, we're able to get in line fairly quickly throughout the session, So while people get wrecked and lead their followers to the slaughterhouse, over here we're learning how to maintain, to prevent explosions in our account, be content with enough, be flexible, stick to our higher time frame bias narrative, right? And yeah, it's just different over here. There's no flashiness. Yeah, it's just what is flashy though is the amount of times the market goes in our direction. How often it has done it this year. Pretty much every single month we've been correct. Is the mic a little bit loud? It seems like it's clipping. So let me know in the chat real quick. Let me know in the chat if it's too loud. I did move the mic a little bit closer to me. So just let me know in the chat. Doing some good. Okay, perfect. All right, well, with that being said, again, a reminder I want to give you guys, we're going into a time of the year, the second week of November, where ICT himself takes a pretty long break. If you guys notice, ICT mentioned that he was in Florida, right? So I guess he was taking a vacation. Generally, he does that around this time of year. And he broadcasts it to make a point to us as his students. Okay, Mike, for sure. Appreciate you chiming in. You're in the private group, so just let me know if you need anything later. But yeah, so ICT sometimes goes on vacations at certain times of the year to kind of really drive home the point that you should be thinking about the conditions we're going into. Why is he stepping away? Well, second week of November to the second week of February generally can be a part of the year that transitions, right? The power 3 for the year closes. Smart money is going away for the holidays. News starts to kind of mellow out. A lot of people are on vacation, and that includes smart money, right? The hedge funds, lots of holidays, right? We got a holiday like this coming week, Veterans Day. Then we got Thanksgiving out here in the States. And then we got Christmas. And, if you were balling out of control, like some of these hedge funds and smart money operators, you'd be out there doing the same thing. So expect volatility to maybe die out, maybe not, because, the political climate is pretty insane. So maybe it's going to still be pretty decent. We'll continue, what we're doing. I am going to have my risk cut from this week to February to half what my normal risk is. If I risk 5 contracts, I'm only going to be risking 2 now. So you calibrate that to your understanding or your risk tolerance. If things don't make sense, if you're on the chart and it's not necessarily looking clean, it's not a time to overtrade and over leverage. Never is. But more so around certain times of the year, you got to be a risk manager, because that's what we are at the end of the day. And if the risk is elevated from, political climate to times of the year to, anything in between that may cause a problem, you want to make sure you're okay with cutting your risk and managing it properly. Because I use the analogy, if you're in a war, if you're in a battlefield, which we are, it's a financial battlefield, but if you're in a traditional battlefield and you hear bullets flying everywhere, bombs exploding, and all this craziness going on, are you going to really risk your normal risk? Are you going to really run out there and start, doing what you would normally do if there wasn't explosions happening everywhere? No, you would probably be a smart person and you would wait, right? You'd wait for your moment to strike that makes sense, and then you would, at a better time, put on more risk. But if you've had a good year, which we've had a pretty spectacular year, why would you want to risk a lot of the good stuff that took place the last almost, 11 months, 12 months? Because you're impatient and want to do more. Why would you risk good progress, by pushing too hard at the end of the year? Same with like Fridays, right? Why would you push aggressively if you've had a good week on Friday going into the weekend? It's just a character flaw. It's a lack of patience, lack of being able to hold on to your profits because you have to be doing something. You don't have to be doing anything. The trades, for those of you that have been with me the whole year, and those of you especially in my private group, you see that there is a tremendous amount of opportunities. It's like 5 or 6 per day that we point out with different models or the same model, right? But something's there for you to engage every single day. Does that mean you should? No. Right? You should limit yourself. You should only have, if you're following my rules, okay, you should only have at max 10 trades a week. Max, because that's 1 to 2 trades per day, right? And it may, sometimes a little bit less than 10, but 10 should be the max, and that's even kind of pushing it, right? You don't need 50 trades. You don't need 25 trades. If you're actually journaling and taking good advice, you're not going to be over trading because you have to journal every single trade. How are you going to justify to yourself in your journal in a positive way about an opportunity if you've taken 15 trades today and maybe made what, $20, maybe $100, right? Imagine the stress you're putting yourself through for literally no reason, when you can just mellow out. There's always another day. If you missed it today, it doesn't mean anything. Just because you don't take a trade on one day doesn't mean that you're never going to. For some reason, we feel that way at the beginning, and it's mainly because of a lack of experience. It's a lack of trust in what it is that you're doing. It's a lack of seeing this happen so much that you just don't concern yourself with the everyday engagements. Now if you're trying to pass a funded account, right? None of them have a time limit. So honestly, even if you're trading a funded account, you still shouldn't be encouraged to do too much. 10 trades a week is fine. Maybe less, maybe 5. If you could take 1 trade a day that makes something, maybe mixing a loss here and there, right? But even that it shouldn't affect you. Over time, it gets easier to deal with this, and you don't get affected by it or feel the need to do so much, versus how we are when we're just starting out. But that comes with time. Give yourself some grace. Do not overtrade and over leverage. I don't care who you listen to. If they tell you to do it or if they do it, you shouldn't listen to them because it may work for them. 90% of people overtrading and over leveraging is just going to lead to catastrophe. And you're not going to be able to journal your trades. And if you're not journaling, if you're overtrading and over leveraging, if you're in a rush, right, and you have to do something today and it has to be profitable, you're going to sadly see that the harder you push in that regard, the further away things will seem. If you do this for years, and don't fix the problem, it becomes instead of a paper cut, it becomes a gash wound that stitches can't even fix. Because your mindset will be so ripped apart and it's just going to take so much effort to get over it. And so a lot of people don't get over it. And then what happens? They quit. All because they didn't calibrate their mindset properly and do the right things. Okay, so do the right things. I try to give you the best advice as I can. It's based on my own experiences, things I've heard from ICT, things that I've seen work for other people that I've, coached and mentored. So the stuff works. Pretty much all the traders that are worth listening to on social media, they say the same stuff. Success leaves clues, and if we're not at a level where we're successful, and we're not taking the advice of someone that's where we want to be, what are we really doing? We're being hard-headed, and just going off of our own inexperienced observations, and over time we see that, but don't let pain force you to listen to good advice. It doesn't have to be that way. You don't have to blow millions of accounts to be profitable. Preferably you don't. Preferably you listen to the rules early so you don't have to deal with that stuff and do that extra work that makes it take even longer to be able to succeed in this industry. All right, so with that table being set, let's see, what is this? Dividend of $2,000 a person. Okay. Wow, interesting. Shoot, I'm waiting. Let me get that $2,000 check, Trump. Sounds like a good idea. Yeah, that'd be pretty interesting. Yeah, that's it. That's going to be interesting. All right, so yeah, this next week we have a holiday on Tuesday. The day before a holiday, the day of, and the day after, what kind of condition does that bring for those of you that have been with me for a while? What is our rules when it comes to trading around holidays? The day before, day of, day after, what type of condition can we expect? Just let me know in the chat. Choppy, is it high resistance or low resistance? High probability or low probability? Let me know in the chat. High resistance, yep. Yep, so day before, day of, day after a holiday, you look at it as a high resistance condition by default. It's just the way it is. Yeah, high resistance, liquidity, and low probability. So what do you do with your risk? You cut your risk, right? You keep it managed. You never overtrade and over leverage, especially around a time like that. Okay, and again, the table's set for the rest of the year. Okay, half risk of what you normally risk, because the conditions may not be ideal. They may be ideal because of the political situation, and you just never know. Seasonally, though, things could be a little bit less correlated, right? Expect a lot of cracks in correlation, choppy, back and forth type of delivery with little follow through. Doesn't mean that that's guaranteed every day to be the case, but again, you start from here on to January, the second week of February. Your risk should be cut, and you should consider this. And so if you see this characteristic, just know that it's typical. Over the years, if you do the seasonality studies that I tell you guys to do, you'll start to notice each month's characteristic within the yearly range, and you'll have an expectation of what to expect every time a new month comes in. Okay, and so we're in November, and we looked at the seasonal chart. There was a retracement for the NASDAQ, the indices in general, and then it looks like it accelerates. There's something that ICT calls a Christmas rally. I'm not sure if he coined that, but the end of the year sometimes has a pretty aggressive move because commerce and transactions are happening. It's interesting, though, because we have a government shutdown, right? So I'm not sure how long that's going to go on for. It's the longest one in history so far. So we will see, we'll see kind of how that gets dealt with. But it is going to have an impact, with the government being shut down. Certain benefits aren't going out that give people a bunch of free shit, and they're not able to just spend the money that the government's giving them. So, like the activity that would come from that, with 42 million people or some crazy number like that spending money, that's absent right now. And in my opinion, and what I've been hearing, just observing, that's been the reason that we've seen, or the excuse that they've used to turn the market backwards, to drop it, right, in the DXY and the indices. Do I think that's going to be long term? Right? I guess we'll talk about that in a little bit. But yeah, it's pretty much the drop. If any of you guys are confused about what has caused this huge decline in the indices and the DXY, I personally believe that that's obviously had a pretty big impact. right? But yeah, so we have CPI this week. We have a holiday, so day before, day of, day after, low probability. So beginning of the week, I don't have too high expectations. Because there's a holiday on Tuesday, I guess I'll have to move the YouTube live stream. Maybe I'll move it to Thursday. Oh, wait a minute. Tentative. So everything that's had tentative by the name, because of the shutdown, it doesn't manifest. So yeah, this week may be even slower. Unless, of course, Trump speaks and says something, then, we could probably expect some crazy volatility just because. So keep your eyes on when Trump speaks, or if he speaks. He's probably going to. He does every week, every other day, or every day. So if there is no news, right, we'll be waiting for 6:30. Just looking at this, I didn't notice a tentative till right now. This week is potentially going to be a bit of a shit show. May not really do much. There'll be something there, obviously, but we have to wait till 6:30. So from the news schedule, it looks like we're going to be going live for the next live call at 6 a.m. Pacific Standard Time. Those of you in my private group, we're going to be going live generally around that time this week. Of course, if you want to get on earlier, just let me know. And then we could. But yeah, expectations for this week are not going to be too intense. So if CPI comes out, it's probably going to be pretty dynamic. Maybe they price something in without even giving the announcement. Use it as an excuse to do some wild stuff. But yeah, we'll see. Remember, Power 3 is one of the first things we think about. So start of the week, right? Consolidation, manipulation. Tuesday, Wednesday, sometimes going into Thursday can be, or is generally the expansion to a certain PD array. Once that PD array is met, depending on what day, Thursday or Friday, it'll then create the end of the week reversal. Or like the cap of the weekly range. So we always got to think of that when we're looking at the news. So we'll see. We'll see what happens with this CPI. If the shutdown's still going on, which I believe it will, they're not going to fold. Nobody is. So we will see no news on that day, unless they put it up last minute. All right, so hopefully that's clear. So if we just jump to the bonds, we could see the consecutive down candles. Prices basically declined. We did talk about this order block here. Go to the 2 week. All right, we've got this order block. So we'll mark that off. First and foremost, though, we got to mark off our current or previous high and low. Previous week's high. Previous week's low. And then the next closest weekly high or low has to do with this low here. Go to previous week's low. Right, previous week's low. So these are our liquidity pools, plus we have, of course, the order block here. So if this is going to go higher, we definitely don't want to see that get violated. Not sure if the DXY is going to be able to go higher. I'm not sure what the bonds are going to do with this shutdown. I'm not sure what the impact's going to be after this decline, but we'll take a look at everything when we get over there. But as far as this chart, where is the weekly order block? So we got this order block, right? So we got our near-term liquidity. We got this order block, 50% of the order block. Notice how we're closing above it. This order block is still valid because of the fact that we're closing above it. So we'll see exactly what the reaction is going to be. We do have a fractal high here. So given the fractal high, the next 1 to 2 candles after this third candle forms could be targeting something down below. If it does want to go lower to go higher. Because we're in a PD array here, though, we're going to have to wait and see how this reaction is going to be. Are we going to start pushing away? If so, right, we got this previous week's high. If we're looking at things just from this perspective, it looks like that's going to be the case, right? It looks like it's going to just use this. It used last week to give that retracement to this PD array. So we took external range liquidity and then reached for internal range liquidity. I don't necessarily think that we have a strong chance of getting down to here, because this order block, order blocks are balanced price ranges. So it's probably going to leave this gap open because it's already balanced down there. But we'll see, right? If it does close below this 50% of this order block, we'll probably look to attempt to get down deeper. But for now, we're just going to look at this as a raid above the highs. Use that to trigger in the rejection. You see the 50% of this wick here. Okay. And it's kind of just, hanging around in this area down in there. So we'll see if we can continue this move higher. Go to the monthly chart. I mean, it's kind of just a mess, honestly. Still inside this monthly fair value gap. It's been solid, right? It's been holding pretty solid. Still got these relative equal highs above us. So I'm not entirely away from the likelihood of them trying to get up there and then try to discover some more higher prices up there. So yeah, with that being said, let's go to the weekly. It's the weekly. Let's go to the quarterly chart. So we've got this wick here on the quarterly chart. We took out a quarterly high. It's pretty interesting. Where is the quarterly high? Right, so we took the quarterly high out. We got this wick in here. Went pretty close to the 50% of that from a quarterly perspective, 3-month perspective. And now we're kind of just in an indecision candle for this current quarter. And it's kind of just been sideways. The bonds and yields have had a very difficult time this year with a lot of adjustments, I guess you could say. Lots of federal fund rate announcements. I think there's more coming too. I think there's like one more in December, if I'm not mistaken. So yeah, look at this. So yeah, we'll see how this wants to behave, right? We are above this order block here, right? It's kind of punching into it a little bit. So we'll definitely keep that in mind from the monthly perspective. Since we're kind of in that area, it wouldn't be obviously too important if it wasn't in the area, because it's a monthly chart, takes a while. But yeah, the previous month was bullish. Now this one's kind of indecisive, having a hard time getting below there. So wait a minute, whoops. Oh wait, there you go. And then go, like I said, to the weekly chart. We got that order block there, these down candles. So 50% of the order block, we have to stay above that if it's going to remain valid. Okay? And if it does, and we start displacing again, we have a fair value gap in here too. Pretty large one to keep in mind for an inversion. Weekly fair value gap. Right, so we're at the middle of that too. So we got this order block, we got this inversion fair value gap, we have this swing low. So if price was to displace and get below those levels, we're having multiple PD arrays to the downside get violated. So that may set the stage for us to then try to attempt to come down and seek, this low, this low, this low, fill in this gap a little bit one more time. And then if it inverts this, of course, we could just continue to use these levels as building blocks to support a move potentially lower. We're not going to assume that at the moment because, the things that I've mentioned. We still have these equal highs up here. I don't think they're going to leave that. But again, if that's going to be targeted, that'll most likely drag the indices higher once more. But we'll see. We also have the trendline liquidity down here for the 5-year. So, until something dramatic happens, we're not off the assumption that this is going to go higher. Do we have SMT? No, it took that high. So we don't have really any SMT. I guess we did kind of at this high here. Go look at the daily chart. And we had SMT at these highs up here, and then it declined. So, like I said, if we can close below that 50%, I'll be more confident that overall we're probably going to target even deeper sell side. But for now, from this weekly time frame, we're going to keep the assumption that we may end up continuing to go to the buy side if this continues. 50% of the order block gets violated, I'm looking at this low, right? And of course, all the same stuff that I'm talking about here can be used on other assets. This is just what's happening in this asset, okay? So yeah, let's come to this, put a little arrow. So I'm going to continue to try to see if this is going to hold until proven otherwise. We do got this wick. It did break down, right? We kind of respected it as an inversion. So that's another early sign we may have to keep tabs on. Could be telling us that, it's starting to build up more interest to want to get down there. But we have to close below this, for me personally, to believe this weekly chart is trustworthy to then target the downside. All right? So, yeah. We'll see what happens going into this new week, right? We have a holiday too, so again, we got to be patient. All right, so that is my opinion on that asset. We talked about this the other last week too. Let's go to the monthly chart, see what's happening. Got a pretty large wick right there. That wick, all the quadrants, looks like the lower quadrants being respected. We have, it's kind of just a mess in there, huh? Yeah, we're trading back up into this monthly fair value gap. Is it going to be used as an inversion? Right, and then send price lower, which would then drag the DXY lower. I did talk about these areas in here. If we got above them and closed above them, and then we looked to use them as support, that'd be early signs until we get up above this high to basically assume that we're going to go to the buy side. We're starting to see fair value gaps get overtaken. We have an order block here. We had this wick here we were watching to see if it would hold. That's one PD array that's been violated. A secondary PD array that's been violated being this weekly fair value gap. Okay, so we'll see if that can be used as support if it is going to attempt to get up. Similar to how the bonds had that trend line liquidity, right? Like here on the 10-year, here on the 5-year. We have a very similar thing taking place in both, right? 10-year here has sell side below it in terms of a trend line liquidity, and this one also has trend line liquidity, but just the opposite to the buy side. We have the inversion fair value gap here if it gets above it. If we run up above that, we have a high, low, higher high, inversion, another inversion, a broken bearish order block on that weekly time frame, the 2-week, right? So if it gets above those levels, we'll start to see things tip over to the other direction. And again, if this indicates or influences what the DXY is going to do, The bonds indicate or dictate what the indices are going to do. Okay, and the foreign currencies, and has a pretty strong impact on commodities too. So again, for those of you that may be new, this is why we spend time here. That's why I'm doing analysis on this and not the NASDAQ like right away, because this is building the narrative. It's building layers to why we can trust whatever opinion we place on the indices and the DXY in the foreign currencies, right? So yeah, we got to watch this here. So I'm going to put a note. Because once you start seeing bearish order blocks get disrespected, bearish fair value gaps being turned to inversions, swing highs being broken, lows getting left while highs are getting purged, wicks being respected, right? Like down wicks. Or here, let me just do like a example. All right, if we get something like this. If we start seeing stuff like this happen, right? Right, like wicks are being respected, the 50% of them, whether it's an up wick or if it's like something like this. Right, even if it's something like that, right, like a down wick and up wicks. If the 50% is being respected as support, that's all order flow telling you, or the algorithm telling you, that order flow is still bullish, right? Up close candles getting violated. Wick 50% levels are acting as support. Fair value gaps are being inverted to the buy side. Bearish fair value gaps are being invalidated. While bullish PD arrays like a down candle is being respected. The wicks, like I mentioned, are being respected, going higher. Fair value gaps bullish are being respected. That, especially once you start seeing highs get taken like this too, you're starting to see the shift, right? And it's starting to tell you or leave signatures behind that price is bullish, or if it's going to the downside, it's the opposite that takes place. They get used as resistance, right? And bullish PD arrays are getting violated. All right, and then of course you couple that understanding of order flow dynamics with intermarket relationships, and then that's how you arrive at a trustworthy opinion. Okay, like these hopefully they're not overly complicated, what I just mentioned, but these are very visual things that show you what order flow is doing and what you should trust and what you aren't going to be able to trust. Okay, so yeah, let me know in the chat if that makes sense. What I just told you is light years ahead of pretty much everybody everyone outside of ICT concepts and people that try to sound smart, like the stuff that I just mentioned. If that makes sense, like you'll soon understand if you haven't been able to understand yet, or if you're new to the channel. These ideas are fairly simplistic the way that I describe them, but they're super visual, and I'm live all the time, so you see me use them all the time. You see it in practice. So hopefully this stuff made sense. All the things that I just mentioned there, you should make it into a list. How do you determine order flow, right? Well, the things that I just mentioned, I'll let you go back and rewind and listen to it. But then, of course, you add on the other things, right? Like 3 PDA rule and some of the other elements that we talk about. And, just off YouTube, you have clarity as far as how to build a narrative. It's not, obviously just like anything else, you have to practice it to trust it. But hopefully, me pointing this out for the last couple of months, well, pretty much the whole year now, hopefully it's been able to help most of you gain clarity, because that's the guarantee here when you spend time with me, in any capacity, you're guaranteed clarity. You're going to learn the elements of clarity and how you can arrive at that with your bias. And, you just keep pushing in, and experience makes it all stick, especially if you're around a community like this. Fritz said, if the correlation on DXY is off, do you favor the bonds and yields to give you indication and verification if they maintain relative correlations? So, Fritz, that's an amazing question / statement, right? Because that's absolutely the case. If one thing is off, if the DXY is off, but everything else is working the way it's supposed to, it's DXY that's being the liar, right? Because in cracks and correlation, you're trying to determine which asset is lying to you. And you can kind of determine that off of, what you just mentioned by looking at other assets. If majority of them are telling you one thing, but the DXY is the one that's not telling you, or that's not rolling with the other assets, generally it's something that's going on with the DXY. And eventually it'll submit, especially if it's with the bonds and yields. Eventually it will submit. So yeah, Fritz, you are onto something there, and that's definitely something that all of you guys want to note. If you haven't, I think I've mentioned that before. But yeah, if you guys haven't written that down, here, let me actually pin that. Oops, because yeah, it's a very important statement, and that's exactly what it is, right? If one's off, just look at the other assets. If all of them are off, you look at the assets that are correlated to the asset you're trading outside of the bonds and yields and DXY. Ideally, though, in the highest of probable environments, highest of probability environments, we want the DXY and the bonds and yields moving the way they should, because that's kind of what indicates or dictates what the other assets do, because it's just the way it is. So yeah, a lot of people don't understand the importance of what I've just talked about in the last 10 minutes, right? Let me be the emphasizer, right? Or let me place the emphasis on this stuff, so you don't miss it. Literally what I've talked about in the last couple of minutes, it's simplistic, hopefully. If it's not, just let me know if you have any questions. But everyone always tries to decide, or determine, how do I read order flow? Well, basically what I've just laid out, from correlation between intermarket relationships, which basically is risk on, risk off analysis, to the order flow signatures that I just mentioned, about the candles when I did the little diagrams, or with the wicks, and gave you that little list. That's literally how simplistic reading order flow can be. I personally do it every single day, keeping these things that I've just mentioned in mind. And as you're in it, and mind you, this is fractal. Okay, so we're on the higher time frame. If this was the 1 minute chart, it's the same thing. If I'm in an execution, it's the same stuff I'm looking for, or watching to help me determine whether price is agreeing with what I'm with what I'm trying to do, or if it's trying to do something else. Right? So Fritz said there was a period this past week where DXY was wonky, but the bonds and yields kept correlation and reverse. In the case of the yields with indices, suddenly stood out to me. Yeah, that's going to be the way it is. Especially because I'm putting you guys in front of things that most people are not. Everyone's trying to sell a signal service or whatever the case may be, and show all this lifestyle nonsense. But here, you're being put in. I'm letting you borrow the experience, like ICT says, with the Jade Master analogy, right? Every single video we watch, every live stream that we're on with someone that's worth listening to, that person is giving you real jade. And before you know it, things are just going to start being familiar to you. That's why having a mentor is priceless, or just being on YouTube with someone that's gracious enough to give you their time and effort to try to see you succeed. I mean, it's priceless versus us doing it on our own, trying to do things through trial and error. I had to do that. I didn't really have anyone that was, willing to be on a one-on-one basis or to even do this type of stuff. These are basically one-on-one calls because I engage the questions and we go for hours, so, it's a lot different being in this community versus a lot of others. But yeah, I'm glad that you're starting to see certain things, Fritz. Just think about it, Fritz. You've been with me, all year? Think about when you first started and how you viewed the market to now. All of you guys, just think about it. Those of you that are with me every week, is there a difference? Have you felt a difference? Like, is it a tangible difference that you feel? Let me know in the chat. From when you first started, even just here on YouTube, in these live calls, to when you weren't doing or hopping on with me on the live calls. What does that difference look like? For those that may be new. Tony said yes. Yeah, absolutely. Yeah, Tony, you've been spectacular, bro. It's been amazing. So yeah, huge leaps in my understanding since being in the WMG community. Yeah. Perfect. Yeah, I'm grateful for that. That's why I'm here live. And then of course, for those that need extra help, that's why I offer the private group. And if you want more one-on-ones, more calls similar to this, I have the different tiers too that allow you to either get one-on-ones or just simply be part of more live calls, basically 6 days a week. But I'm grateful that the YouTube channel, I've seen massive amounts of testimonials just from being on these calls on Sundays and Tuesdays. And I couldn't be more grateful. I was kind of concerned when I first started mentoring that I wasn't going to be able to critique or not critique, but say things the way I wanted to say them or get people to understand. But I think because I had to explain it to myself in layman's terms in ways that was simplistic, I was then able to take that and then share it with you guys with my experience. And I'm very grateful that you guys have been continuing to grow and give value, and feel it's worthwhile to spend time with me on these days. Tony said, I can understand what I'm seeing and what's going on in the markets. Yeah. So would you say that my guarantee for clarity is actually a true statement when I'm coming out here saying, I guarantee you spend time here with me, either in this medium or privately, I can guarantee that you will never see the markets the same. You will have clarity, or at least be able to get on your way to clarity. Would you say that that's a true statement? For those of you that have been with me for a while, let me know in the chat. Tony say, yeah. Remind you, Tony and Fritz have only been with me for a year, right? A little bit less, and even then, within a year, it's been a lot of accomplishments I've seen. Yes, with no hesitation. I like that answer. That's awesome. All right, well, thank you guys for indulging me with this and letting me know your thoughts and your experience. It's very much appreciated. So thank you guys. But yeah, so getting back to the charts. So yeah, with the bonds and yields, this is essentially, we'll keep it clean in this. I'm definitely trying to watch what this does. If we break this high up here, which is a monthly high from October, yeah. I'll take this as a run on stops, weekly order block reaction to a shift in market structure that now has multiple PD arrays being violated, showing that order flow may be changing to the buy side for the yields. That will then drag the DXY higher if it is going to go higher, push the indices lower if they are going to go lower, and we'll see if we can couple that with the bonds too. If they drop, it'll have the same effect on the indices, and the reverse effect on DXY, right? Basically allowing it to go higher in terms of the DXY. If this drops, DXY goes higher. If the yields drop, or if that's going to happen, right? If this is going to go lower and send the DXY higher, we want to see the yields run to the buy side to favor bullish DXY. And then, of course, that would mean that bearishness would flood into the market most likely. Maybe not instantly, but at some point in the near future for the indices and the foreign currencies. So if this continues to drop and we break these levels I mentioned that should hold if it's going to be bullish, we're going to be able to favor an even deeper decline. Couple that with the shutdown, it'll probably be pretty dramatic. And I got some opinions as far as where price would be headed on the indices if that happens. But yes, so I hope all this stuff makes sense for these two assets. And we will now jump to the DXY. All right. So with that being said, so yeah, if this ends up going higher, we'll definitely see this response here off this monthly high, which I pointed out in the private group. I said watch the reaction from this high. It's probably going to be vicious and give us at least some type of retracement. It did a lot more than that, right? Like I mentioned, when there's a fractal high that forms on the weekly, on the daily, you want to look at that. Once that third candle forms, you want to anticipate the next 1 to 2 candles potentially reaching in that direction still until it hits a PD array that makes sense to push price back in line if the narrative hasn't changed. In this case, if bullishness hasn't changed, which it hasn't just yet. We basically just used this fractal high. We positioned this run on stops at this monthly high, leaving behind a fractal high. Once that third candle happened, what did it do? It reached down for a specific PD array, a discount array, right? And then once it hit that discount array, you can see how that was the main target. It used the monthly high. They purged the monthly high external range liquidity to then seek internal range liquidity. So monthly high swept to daily fair value gap targeted. Okay, if you have like a target or a higher time frame level like this on the weekly chart, monthly chart, whatever. When you're looking for a target, right? Say it's like in this case, right? The monthly high, it's also a weekly high, but let's just say it's the monthly high. The weekly / monthly high got purged. If it indicated that it was going to give a retracement, then you would look for a time frame that's a little bit below that main higher time frame that the idea was rooted in. Like in layman's terms, if you're using a monthly PD array, target a PD array that's 1 time frame below that or 2 time frames below that, okay, as your target, okay? And of course, sometimes it'll reach to the monthly, but when you're navigating price from liquidity to liquidity or PD array to PD array, you want to make sure that the PD array you're using as a reaction, you're going to keep that move rooted in that, but your target ideally is going to be on a time frame that's a little bit below, like 1 or 2 time frames below. Same thing if this was like the 1 hour, right? If the 1 hour liquidity was swept and we were retracing, you can use like a 15-minute PD array, right? Sometimes that's going to be the case, right? Where it targets something like that, but then it may also it may be reaching for like a monthly level. If we took a monthly level, sometimes it won't though, right? It may take a couple days for it to get to that level. So for intraday targeting, it's pretty helpful to keep that in mind. So you can set your expectations in a more calibrated, accurate way. And of course, it's potentially going to get to, if you take a monthly high, it may potentially get to a monthly PD array. It kind of did here, right? But what exactly did it reach for? It reached for this little gap in there, right? Instead of just like this wick, right? We could see how precise that was. Okay, Does that make sense? I hope I didn't butcher that explanation. I feel like I did. But let me know in the chat. And just a reminder, if you guys get value from the content, if you could like the video, subscribe to the channel, spread the word. If you know anybody that could benefit from it, because we're trying to help the community here, and you guys see with all the testimonials and positive reviews about just even on the YouTube channel, let alone the private group, it's pretty spectacular, and lives are being changed, and confidence is being boosted, and clarity is being achieved, and not many people on social media can say that outside of this community, and they mainly, the ones that do, mainly reside in the ICT community, so we're part of that ecosystem. So, okay, Fritz said the explanation made perfect sense. But yeah, again, don't forget to like the video, you guys. Subscribe to the channel. Since internal range to external range, higher time frame, internal to external range, and a lower time frame. Yeah, pretty much. Well, I'm glad that made sense. I definitely felt like I butchered the explanation, but thankfully I didn't. So yeah, hopefully that is the sentiment across all you guys. Fritz said 1 hour DXY looks a lot like market maker sell model completed. Yeah, I mean, you could look at it that way. One thing I can say, that if we do end up dropping aggressively, right, and it overtakes this and it shows it inverts it and whatnot, if we start to decline, if we can get price to get down into this level, I will be looking at this as a second stage distribution for this large market maker sell model. Fritz referred to this consolidation, accumulation, reaccumulation, smart money reversal, first stage distribution, second stage distribution, and then we blew that out. So we got a little market maker sell model that may be inside this larger potential market maker sell model too. If that fails, because we could see the elements of the market maker sell model like present currently, if that fails and we get above this high, if you are not confident that we are still bullish, that is a strong indication that it's time to start agreeing with the higher time frame bullish delivery, right? Because some people get scared of this type of stuff, but market maker models can be used for many things. It could be used as validation tools as well, right? So yeah, hopefully that makes sense. It's the power of 3 on the higher time frames. Can you elaborate a little bit? Maybe I'm just kind of blanking on what you're referring to. If you're talking about like this decline to then go higher, possibly being the higher time frame power 3, I could agree. Definitely would agree. It's the start of November too, so if we're going to be bullish in November to start the week, it declined below the November open price. I would definitely agree with that, because you can map out the monthly chart same way you map out the weekly chart. Just put a line at the monthly open, watch all 4 weeks, right? First week consolidation accumulation or consolidation manipulation, second and third week expansion, high or low of the month can be set around that time, and then the last week pulls back in reversal, especially if it hits a higher time frame PD array or takes a significant higher time frame level that could result in a reversal response, something like this, right? Tony said, you teach what patience does while watching what you see play out. Yeah. And you guys that spend time with me, regardless of my small profile, and you don't hold that against me, you see that what we do here is ridiculous. Like, I don't even have to say that it's ridiculous. Those that stick around and watch, you see, for the last 11 straight months, we have been correct on the bias and narrative, where it's going. And when it was a little bit choppy on the lower time frame, we have still been able to navigate it. more so in my private group, because they see it day to day to day, day after day after day. So they really see it. So it's really undeniable in that community. But even here, just like the stuff I show on Sundays and our one live trading call per day or per week, it's all unfolding pretty spectacularly. So yeah, Tony, I completely agree. I try to lead by example. The things that I tell you about patience and all that stuff, I do try my best to lead by example, and hopefully you guys see that, and this stuff's been rubbing off on you. And yeah, it's been a spectacular year. I've had the most people get funded this year out of all 3.5 years of me teaching. The biggest volume of people being funded has been from this year, which is kind of interesting. It makes sense because a lot of my private group students have been with me for years at this point. So some click faster, some take some time, but eventually you get there being around a community like this. Let's see, that massive 100 handle buy you guys took on AM was completely missed by a certain ICT streamer. Instead, she got oh my gosh, watching a red heat map. What the hell is that? Yeah, I think I know what you're talking about. That's very interesting. God bless her, but hey, this is dog eat dog world, okay? It is what it is. Yeah, of course we're all going to make mistakes too, right? But it's very far and in between in this group. It's a heat map showing us. Oh, I know what you're talking about. Yeah, you notice that we never look at stupid shit like that? Like, what is that? That doesn't do nothing for us. Yeah, it's a tool to throw people off. When the market's red, right, when things are declining, what is price doing? If the higher time frame's bullish, but the day shows red on a heat map, whatever these dumb gimmicks that these people use say, what is that telling us? Just without even really putting too much stock in what price is doing, right, or looking at it too much. If we know from previous week or previous day that things have been bullish overall for whatever asset, and they're using these tools that are red, that's telling you to short, when in reality it's just pricing in a discount to probably go higher if it's still bullish and nothing's changed. So I see no real value in using those types of tools. If it's a paid tool she's using, then she's probably got an affiliate link for it, and it's probably why she's using it at her own detriment, right? But yeah, don't use those. If you're taking my advice and ICT's advice, that type of stuff, it probably looks cool, but it depends on how you're using it, right? If you're using it to observe the different stocks in the indice you're studying or trading, maybe it's helpful, but using that to indicate anything whatsoever in terms of bias and narrative, I mean, they're overcomplicating it, for literally no reason, honestly. Yeah, it doesn't matter how many orders. It doesn't matter what any of these tools are saying. Volume profile, all that. It doesn't matter what any of that stuff's saying at all. What matters is order flow and the things that I've described today, simply, right? What is order flow doing? Is it bullish or bearish? Well, what's the most recent high and low, right, for the weekly and daily chart? In terms of that list I gave you guys for order flow study a little bit earlier, what's happening within those different elements, right? How about the 3 PDA rule? That stuff is better than any paid tool you'll ever have because it's actual order flow. It's reading the language because this is an algorithm. ICT's concepts describe and clear up or translate what that algorithm is speaking, what the language is saying. And as a result, being fluent in the language of the market, which is what ICT concepts deep down really are, things become a lot more clear. With all that stuff being mastered, it becomes like clockwork. Like if you learn a new language and then after years of speaking it, you become fluent. Well, It's the same thing with this. You know, it's a language that we've, you know, started learning or have been learning. And once you're fluent, you know, it's a thing of beauty. That's for sure. And languages don't really change, so it's the same thing with this. It's never going to change. Let me see. I don't think I like this. So Fritz said DXY bonds yields are the only tools needed. Yeah, in terms of intramarket relationships, really. And then, of course, you pair that with what I mentioned earlier with that list of order flow, understanding, right, the wicks, the discount, or the bullish or bearish PD arrays, inversion levels, highs or lows, are they being respected? Which one's not, right? Are stop hunts below lows leading to expansions and shifts in market structure higher? Or are highs being taken and shift in market structures are being presented to the downside, right? So all those things are better than any freaking tool any of these people would try to shill to you. You know, you don't need anything except TradingView and, you know, maybe the COT and seasonality stuff that I talked about. But yeah, don't let people fool you, you know. Don't let people fool you. Force them to come out here and show you. I do this every week. In my private group, I'm doing it every day. And it's literally, I put my neck out there every week, every day with my private group. And some of them are on this call too. One of them had to go to work, which that'll probably be very temporary. Give it like another year or two. It's probably going to be a much different circumstance for that man, that's for sure. And probably many of you guys too, right? Shoot, music's getting a little loud. Okay, yeah. But yeah, so you know, keep this stuff in mind. Don't let people fool you, especially streamers on YouTube. It's okay to have affiliate links if they're using something that works, but you know, you don't really need much. And hopefully you guys see the things that you do need or should consider really digging into. Hopefully you find a lot of that here. Hopefully it helps you sift through the BS and overwhelming amount of information on you know, on the internet, right? Because we get right down and dirty with it when we're here. So yeah, just coming back to the chart real quick. So yeah, again, we got this wick. This was a result of this. I did mention in my Discord, I think I mentioned it in the free Discord too, when we were approaching that that high. Let me actually go back and see. Yeah, right here. So watch the, why is this so blurry? And we got the timestamp and everything. Watch the response from the high. Okay. This was on November 5th at 5:30 a.m. p.m. Pacific Standard Time. Or a.m. Pacific Standard Time. 5:30 right there. Right? And you can see the result. And we talked about it and walked it down and did everything live. You know what I mean? It's all there. All the evidence is there, whether I'm worth listening to or not. You know, the proof is in the pudding every week. But yeah, so we'll see what happens with this. We got this weekly wick in here, like I mentioned. We got the quadrants. We'll see if we can't get to the 50%. Remember what I said about order flow, right? If the order flow is going to be super trustworthy, that this is going to continue to be bullish and rapidly continue, what needs to happen with this wick? Can you guys tell me in the chat? What needs to happen with this wick? Right? If we're going to continue pushing price higher and trust that this pretty much is going to be the brick wall that stops us and continues to push. What should happen in terms of this wick and the levels? Right? How should price behave with that if we're bullish? Premium needs to be respected. Right? It's a premium, meaning the upper portion of the wick. Same thing with fair value gaps and whatnot and order blocks. We want that upper portion to stay respected and not really try to do too much going down to the lower portion of a fair value gap of the wick, right? 50% of the order block. We want the 50% to the high of the wick to be respected and have most sensitivity in that upper portion if we're going to be bullish, right? So that's what we're going to be watching here. Okay, this whole thing is a retracement. You could map out this, right? You can map it out like that. We've got 50%. Ironically, we came down to a discount relative to the low here that led to the big rally. So we got equilibrium in here too, which is pretty nice to see. That's stupid ad. We have, where's it at? Equilibrium. So we don't really need this, but let me tell you this too. Actually, let me put it on the other chart. So if we take this high to that low, and let's say that this does turn into a run higher, market maker buy model. Okay. We do got relative equal lows down here, so we may attempt one more time, and you know, just to remind you guys, because I didn't really talk about it, but we do this every week, right? The first things you look at is obviously where we came from, where we could be headed, the current high and low the previous week, and then one that's, you know, in close proximity. Maybe it's like the one right next to it, right? The high and low. Very important buy side, sell side liquidity. Very easy way to identify most important liquidity. PD arrays that are in close proximity relative to the time frame you're looking at. If you're looking at the daily, you're going to map out the Friday's high and low. Aside from, you know, what we just mentioned. Okay, let's put that up there. And then that gives you a nice little template, right, of what liquidity is important at the current moment and what you should keep your attention on. And then, of course, like I said, every time frame you go to, the most near-term liquidity relative to the, you know, previous candle, if we're on the daily. This one's really far. We do have relative equal lows here, like I mentioned, right? And then we have that daily fair value gap. Note any wicks that are in close proximity, because like I mentioned today, and like ICT's mentioned, and like we've continued to talk about over the last, you know, 3 years, they're very important, you know. And then ICT's really drawn attention to it this year, which it's about time. Shit, it's about time. But yeah, so essentially that's what you would want to look for right away, right when you start off. We kind of did that, kind of mentioned it, but I just wanted to make sure, you know, to double down on it. So those of you that may, maybe this is your first time listening to the channel or to these live calls, that's the first thing you do. Current high and low, the current candle on the weekly or whatever higher time frame you're looking at, the one that's in close proximity, right? The recent one before that one, so like this, that high and low. In this case, the low is the only thing that hasn't been used. We do have the high there, but you know, maybe it trades back into it, uses it, but more so we want to look at like this and like this and like this. And the same with the daily. For the start of the week, you look at Friday's high and low. Okay? Because when this candle opens, whether it's going to go above this high or down to this low or wherever, this candle is going to open up a brand new candle. So in order for it to do that delivery to this high, for example, it's going to have to break through this level. Maybe it drops down, uses this as an opposing liquidity pool, sweeps that out one more time to, you know, basically just put the knife in one more time, right, to these people that have their stops here, then it looks to go. It may do that, right? It may open up, drop down, take this out, get a little bit deeper into the discount from this low to that high, and then look to rally. So pair up the orders below this sell side liquidity at this PD array inside this weekly bullish order block to then set the low of the week and then rally up and get up above here, right? Take this out on its way to targeting this. We also have this high and this gap up here too that may end up getting utilized. So those are significant too if it does prove that it wants to turn and go higher. All right, and then of course with that being said, like I started to mention here, if that's going to be a market maker buy model, and we've determined that this is in fact the sell side of the curve, right? You look at accumulation, possible smart money reversal area, and then every time it hits these quadrants in here, 25, 50, 75, I want you guys to have a rolling study. Whenever you map out a market maker buy or sell model, I don't care what time frame you're on. You could be on the 1 second chart. When you identify a market maker buy model or market maker sell model, in this case, the buy model, sell side of the curve, when it starts to move in that direction to complete the market maker buy model, the quadrants are very important to identify because those are areas where price may set up dynamic support levels, dynamic PD arrays, right? Create PD arrays around that area, or maybe there's one from previous that is within that area, and then it may set up opportunities pretty rapidly in those areas, especially once you get beyond the 50%, and even more so when you get to the 75%. Because what's up here in the 75% generally, if we're about to blow out this high, what phase of the market maker model forms generally around that area? Which phase, right? Man, YouTube is unbelievably ridiculous with these ads. It is insane. I had to have skipped like 50 ads just in the last hour. Yeah, Fritz said second stage distribution. Okay? So you can kind of get a measurement, right? And even a target, right? Like if you're executing something down here and price is moving and you've determined that it's a market maker buy model and we're going higher, you could use these quadrants as targets and then kind of pair those out with one of the PD arrays. Look how perfect this gap aligns with the 75%. That's interesting, right? That's something to keep in mind. This gap is a new day opening gap. I'm actually mark that off for future reference. Just in case, right? We still obviously have some things we're going to wait for. We have to make sure we're paying close attention to how this order block is going to be respected or not, how this fair value gap is going to be treated. Because again, if it fails to deliver this potential run higher again, that's going to be a failed market maker buy model to the buy side, and we will then be able to take this low down here as a market maker sell model and then quickly adjust, right? Do I really have to dig into market maker models? Yeah, market maker models are like the foundation, the heart and soul of what it is that I use or what I trade. My overall, process, how I internalize price delivery. It's like the blood in the body that is my trading model, like my overall process. It's that important. I do have a video about it, Chawezi. If you haven't dug into it, definitely go watch that video. There may be some stuff that is a little bit disjointed. I do encourage you at some point to go through ICT's charter market maker buy model and sell model series. I think it's model 6 and 7. It just gets you familiar. And mind you, market maker models don't have to be used as a model to execute. Although you may end up being comfortable with it once you really dig in. But I'm 100% sure that if any of you guys study market maker models and you start to understand it, or listen to the things that I talk about in terms of the different elements and how it's used, how I physically use it every single day, because I use it every day, because we're always in a market maker buy or sell model. 24 hours a day, every single time price is moving, you're in a market maker buy or sell model. It may be on the seconds chart, but that seconds chart is working inside of a larger one, right? This daily chart, right? Any decline that goes lower to go higher should be viewed as a market maker buy model. Any, rally that, ends up going to the downside, anything that goes higher to go lower, you want to think of market maker sell model. Like Fritz pointed out, this whole upper portion up here leading to this retracement delivered a higher time frame retracement, but that higher time frame retracement, the system that it was utilizing, the logic it used, was to deliver a market maker sell model. Right? It's within a larger view. Right? There's market maker models, like I said, happening on every time frame, all the time, every week, every day, every second of every hour. Right? But of course, it takes a little bit of time to get used to it. And being here, I mean, again, it's literally, once I learned market maker models, that's when everything changed for me. Like literally. It all just, the flood of, holy crap. Like this can be anticipated at all times. Like, and if it doesn't make sense, I'll just wait for the delivery to mature a little bit, pick out the market maker buy and sell model framework, and now I know what I'm doing. Now I know exactly, what I need to do in certain moments in price and where we're currently at in terms of the phases. And each phase has its own characteristics, right? And so when you get familiar with that, you start to effectively be able to calibrate your engagements, your behavior in the marketplace, and what you should expect. Aside from all the other, intricate details that we talk about that lead us to one thing or another. Right? It's a dovetail effect. Everything, you as a trader, you have a layered system that you're learning. It's not just one thing. It's not just another thing. It's multiple things put together. When it comes to entry, like when you're going to make a decision to take a trade, you obviously want to have one thing that you're really, really good at, one thing that you master at first as a baseline. And then you can use that as you go through your journey and learn more concepts, and you start to see how things dovetail and overlap on top of one another. I showed many examples of overlapping breakers, YouTube model 2022, and my Razor model that's exclusive to the WMG family in the private group, which is unrivaled, by the way, right? But a lot of stuff overlaps. You learn that over time, especially with the market maker models, because you'll be inside of a market maker sell model in the higher time frame, and when it's going lower, every retracement that goes higher, you'll learn to classify that as a market maker sell model. And that means when you take this 1 hour chart and you go to the 5 minute, if it is a higher time frame market maker sell model, every retracement that goes higher, you can now drop to the seconds chart if you wanted to, and map out a very logical, precise, consistent framework working within that higher time frame narrative. It just makes things, I mean, you see how vast the understanding becomes once you get familiar with the market maker model idea. Choezi, yeah, definitely do that. Fritz said, so if I see a breaker on the 1 hour, it could be a phase on the 5 minute. Yeah. Here, let me actually just make an even better example of this. Wait a minute. I'll just give like a quick little breakdown real quick. But yeah, so if we have like, here's the original consolidation. I think I talked about this the other day too. Actually, let me just do this real quick. So yeah, so just bear with me real quick, because this is important. I've talked about this, I think, numerous times, but let's just reiterate it because it's that important. It's that important. Okay, and then all right, so crap, why isn't it letting me move it? Okay. So we could see this potentially being a, let me actually move this real quick. So yeah, we could see that. So let's say this is like the daily, let's say this is like the daily chart. Okay. And we see consolidation happening. Okay, and then we get like deliver like this. And we have a fair value gap on the daily chart. Let's just say this is the daily delivering, and this is like the 1 hour, right? You could kind of see what the like it's a 1 hour delivery. Price comes up, hits a higher time frame PD array, but starts. Maybe this is a PD array too, right? Let's say this is a order block. And this drawing tool is absolutely horrendous. Dude, I forgot how crappy this thing is. But yeah, so when price, let's say it runs down to like a daily order block. Okay. And then price hits it. We see somewhat of a response, a consolidation takes place. And we see a retracement, right, that takes place, and then another retracement. You know, this right here could also be a consolidation too, right? Because maybe this was a market maker sell model, right? In like a monthly retracement, right? Or our monthly bearish overall trend, right, going lower, and then retraced, boom, and then we came back, and now we're gonna spit out another leg, right, to the downside. Well, if price hits this higher time frame level, we got consolidation. This is going to be a daily time frame retracement, right? So this will probably be, you know, a couple of candles moving higher, just to simply retrace to a higher time frame PD array. Okay, and then once it obviously hits that, you know, we'll see something like this, and we got the first stage distribution, second stage distribution, and then it comes down, and maybe there's another liquidity level down there. What I want to point out though is, if this, say this is like the 1 hour chart, okay, and you drop and you see this is forming on the 1 hour chart. If you look at these segments of price delivery, all the different phases, right? One here, even this one at the higher time frame PD array, and then we got another one here, until it finally finishes off to another level. Each of these phases, say this is a 1 hour market maker sell model, right? Each of the declines here that are reaching for this PD array up here, which let's think about this as a daily fair value gap up here. Okay? Each of these phases, as price is giving us that higher time frame retracement, targeting this level up here, okay? This retracement lower to go higher, there's baby market maker buy models inside that as it's setting up this market maker sell model. This is how fractal this is. Even if this is a market maker buy model on this maybe 15-minute chart inside this 1 hour retracement, If you drop even further down, you'll see even more. Every time price goes lower to go higher, think market maker buy model. Every time price goes higher to go lower, think market maker sell model. So you can start to see inside of a whole entire higher time frame move, you could see just how detailed you can get when you understand the elements of a market maker buy or sell model. Because if you're reaching, like if you're in a higher time frame daily retracement to get to like a daily fair value gap, and you drop down to the 1 hour to kind of view like the weekly range, right? This may be what happens on Monday, right? Or yeah, let's say maybe Sunday was here, right? It declined, and then Monday, right, presents this, maybe starts to move, then Tuesday, Wednesday, right? Thursday, Friday. So you can kind of see how this 1 hour would look on a weekly perspective too. But in each day, in each phase of the market maker model, you have baby market maker buy and sell models. If it's on the buy side of a larger market maker sell model, you'll think in market maker buy models until it reaches that higher time frame PD array, right? So in this case, it would look like something like this, right? So this whole entire move here is the buy side of a curve to the daily FVG or a daily order block or a previous week's high, whatever it's trying to reach for to then continue to give us that decline lower. And then of course, once it declines lower, this is the sell side of the curve. This is the buy side of the curve inside of a higher time frame retracement. Right, so if we're thinking about it like in candlesticks, kind of what that would look like, right? Come down like this. Appreciate the subscription, whoever that was. Presh. God bless you, brother. So say this is what the daily time frame looks like, right? I'll get through this example and then we'll jump into. I think we'll just jump straight to the indices after this. But hopefully you guys are getting value. You know what I mean? Like if you're getting value, throw a 1 in the chat. If this is like a review, maybe throw a 2 in the chat so I can see kind of where everyone's at. But if this is brand new, I mean, this is going to be extremely helpful when you go study it and get more familiar with market maker models. All right. Just bear with me for a minute. Gotta pull the inner artist out of me. Okay. Trying to make it look as clean as useful as possible. Okay. And say this is a daily fair value gap that we're looking to see price reach into, right? And let's just say this is a Sunday. Right, the new week starts here. Like this is how we ended the week. Okay, let me actually erase this. Get this out the way a little bit. Okay. So let's say this is our fair value gap that we're going to target. Because now we have a very strong displacement. Let's use a similar idea to what happened with DXY. I'd say we purged out a significant low. Let's just use monthly. Let's just use a monthly low. Okay. And we're basically, in a nutshell, what we're gonna do here is kind of show or walk through the process of price going through a retracement to then continue going lower. How you should be thinking when you see a displacement happen, what the first thing in your mind should pop to. Instead of thinking, oh, it's going to short right away. Oh my God, I'm missing something. Instead of being like everybody else, we're gonna walk through a thought process. This is my favorite play in my playbook, right? Using market maker models, higher time frame, fair value gap retracements to, like internal range liquidity to external delivery, right? Assuming that it's going to keep going lower. Okay. So yeah, we'll paint this. It's one of the plays in my play. I have many of these types of breakdowns. So yeah, if we have the week that just ended like this, thinking from a weekly perspective, narrating the weekly range delivery, what to expect, thinking of power 3, thinking of market maker models, and kind of what our mindset should be going into a new week. Same thing for a new day too, right? If you're thinking about just like a daily perspective, right? But we're going to narrate the like an entire weekly range here, okay? So when price opens up, right, the first thing we look for obviously is accumulation manipulation. If our expectation is that we came off of an external range liquidity raid and we have a fair value gap that could reasonably be looked at, right? Or even if, we're not there yet, right? Even if it doesn't blow the low out first, right? The same thing could apply if it stopped right before it. And we're looking to see something basically play out, right? Let's actually use a scenario where it didn't break the low, okay? If I could move this damn thing. There we go. So let's say that the week opens up. Okay. Change the color real quick. Let's say the week opens up and we got, Sunday, Monday. I'd say this is what happens. It's like a consolidation, okay? All right, doesn't really do much. And maybe it purges this low, okay? So Sunday, Monday, if we see a fair value gap up here like this, and we're looking to anticipate a retracement happening, because if something is displacing, the first thing your eye should jump to is, again, the current candles, the most near-term candles, like last 3 days, if this was a daily time frame. But the next thing you have to look for is obviously a PD array that would make sense if price was going to continue going lower, right? If it's going to continue to go lower, if it's been going lower, and this type of displacement happens, it's rational to think it's going to go from here, maybe take a low and then rally up again, hit a PD array that's logical and a premium, to then seek discount again. Because it's not going to just stay at a discount. It's going to run lower and then try to give this type of scenario here where smart money is going to be set up at a premium. All right, but when we're thinking about power of market maker models, say this is Sunday, Monday takes out the low, and then we see something like this take place, where price gives a response from some level, or there's some reason for us to anticipate that price is probably going to stop here. Maybe it's a order block or something, right? If it's been bearish and it hit a bullish order block, we still think it's bearish overall, but we hit an opposing PD array to the downtrend. Or, like I said, we took a low or something like that could result in a response. The next week that we go into, like this week, right, that we're headed into, you would think, okay, Sunday, Monday, consolidation manipulation. So we got consolidation manipulation. And if it is going to go higher to go lower, right, we got to think like this, okay? There may be another bullish candle that happens, right? So Sunday, Monday, Tuesday, Wednesday, right? Maybe it comes up and does something like this. Right? But after a displacement, this is what you want to think. And then when you're thinking of market maker buy and sell models from the higher time frame, every single idea that goes higher to go lower, if we're bearish, even if we're bullish, right? If it's going higher to go lower, I mean, the same stuff's happening even on a counter trend basis. Like if we're in like a downtrend, You can also map out a market maker buy model. Maybe there was something like this over here that took place inside this candle here. Let's say it's a daily candle. Maybe something like this took place in here, like a consolidation that happened. And then it dropped down, made a smaller market maker buy model to set up this larger one. Because that's a possible framework too. In the context of this daily retracement to a fair value gap. Like you can, this is how deep you can get with this stuff, you know, and hopefully I'm not butchering or making this too complicated for those of you that or for some of you guys that may not have spent too much time on this. Hopefully it's not too overly complex. I'm sharing an idea about the context behind a specific framework, about a specific scenario. If price was like displacing and then we're looking for a reaction from a level to maybe, you know, retrace to then continue going lower, right? It could be a smaller market maker buy model that took place to set up this daily fair value gap retracement that then may set up for price to continue going lower and targeting maybe, you know, another level that's even deeper. Let's just use a new week opening gap down there as a target, right? But when the week starts, Sunday, Monday, Tuesday may give you a displacement. This creates a bullish order block short term. All throughout this bullish candle in here, if this was a daily chart, you're thinking market maker buy model until we get up into this level. Another bullish candle happens. You think market maker buy model again. And then once it hits this daily fair value gap inside this retracement we've just kind of narrated, you know, we may end up seeing something like this happen, right? It may look to, you know, start tipping over a little bit. Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, right? Maybe it's one big candle. Maybe it kind of fails to do it, but overall it delivers it. Now, each portion of, or each daily candle that is used to push us up to this higher time frame PD array from a level that we saw a reaction from or anticipate a reaction from, each bullish candle can be seen as a market maker buy model. On the 1 hour time frame, you may see something like this happening, right? You may see the, you know, the small retracements, you know, that set up the 1 hour perspective that looks like this, right? So just think about all this delivery in here. Think of this as like the 1 hour chart within a large weekly range. This is what it would look like on the daily chart. This is what it could look like on the 1 hour chart, reaching for a daily fair value gap retracement to continue going lower, right? And I'm trying to basically highlight the effectiveness and clarity that's built when you understand market maker buy and sell models within a higher time frame framework, right? If your framework is, I want to see this daily fair value gap get targeted because last week was super bearish, right? Any type of retracement, reaching for any PD array, right? If you're thinking it's going to go higher to go lower on that daily chart, each daily candle that's reaching towards that level can be classified as a market maker buy model. You can't lose sight of obviously what the larger narrative is, because, you know, if you're in a bullish trend, market maker sell models most likely will fail. If you're looking at it from this perspective, like the little phases that are setting up that larger run higher, in bullish trends, market maker sell models will fail. Sometimes they'll complete if they're targeting, like, you know, maybe this, right? Say it was going to go higher and we saw a market maker sell model happening here, right? It may fail to break this low, but maybe there's a smaller one that set this up just so price could, you know, have the response to the buy side from here. You know, in that case, you know that you're wrong, or you got to get in line with the bullishness. But even in this case, this high here, lower, that leads to a run higher. What would that be looked at as? That'd be looked at as a market maker buy model, because it's a lower to go higher type of delivery, right? So that's a perspective if it was to be bullish. Sometimes market maker sell models will fail in a bullish trend. Most of the time they will fail, right? Sometimes they'll complete if it's like on a smaller scale like this, just to set up the move higher. Maybe it sweeps out a previous day's low from that daily chart to then go higher. You know, that is something that happens, right? But yeah, getting back to this example, right? The 1 hour chart would essentially would look like this in a daily retracement to a fair value gap. And then this is what the daily chart would look like. But in each bullish candle, setting up that daily fair value gap retracement to go lower should be a market maker buy model. Or you should think of market maker buy model and failed market maker sell models. And then once it tips over or taps into that level and starts the reaction away towards the, you know, the main target, say it's the low here or some other PD array, you're in a larger market maker sell model, but each little phase in here, if you drop down to a lower time frame, you'll have baby market maker sell models on the sell side, and then of course baby market maker buy models as we approach this up here. So why is this important? Because when you're trading on Monday, Tuesday, Wednesday, Thursday, Friday, each day has its own characteristics, right? And Monday and Tuesday may end up being a market maker buy model on that lower time frame, which you could frame out and make that a part of your engagement for that week, while you're inside of a higher time frame daily retracement to go lower, right? And then of course when it tips over, you know, Thursday and Friday, you may actually have a lower time frame, 5-minute, 15-minute market maker sell model that you can then try to engage and frame out, right, within the little phases. See, this diagram in here that you see, this is the 1 hour time frame depiction. Inside each of these little phases, it's setting up the same stuff, right? Like, for example, on the distribution side, right? Because this here is depicted here, okay? This is just a daily time frame perspective, right? So it would look like this on the 1 hour chart, potentially, right? Or maybe like the 4 hour or whatever. But when you drop down to those super lower time frames, this same thing is happening here inside this little retracement in there, okay? So if you're in a higher time frame market maker sell model, in each phase, this type of thing is going to take place down inside this little area. So again, why is this important? It's important because it's showing you how detailed you can get with the market maker buy and sell models, and how each phase is showing up on every time frame. And it just opens, like, you may be in a larger overall picture like this, for example, right? The daily fair value gap retracement to continue. But you're also able to go down and break these little pieces down, each daily candle down within the week, and map out another market maker buy or sell model towards this particular level that you're looking to see reactive or have a reaction from. Does that make sense? Let me know if what I've been talking about here makes sense. If you guys have any questions, let me know. If you need me to clarify anything. But I hope I was able to get that across. I am thinking about, like, how a lot of you guys may have not dug into market maker buy and sell models. But I'm just kind of showcasing the fractal nature and price, how you can think of the start of the week, and how you can go through the week thinking from a view of market maker buy and sell models, and how it can be helpful across all time frames, and why it's so important. I'm trying to really drive home the point that market maker models are absolutely ridiculous to learn. Like, if you learn them, it's a whole new world opens up for you. And I mean, I don't know how much more I can overstate it. But it's one of those things, and I have a video about it. I engage them every single day, right? And so you get to see it real time play out constantly. You've been able to see the result of the things that I have been sharing and the things that I continuously push your attention to. So hopefully the result and testimonials really push you guys to study some of these things if you haven't already. And of course, I'm always here to assist. If you need more one-on-one type of guidance, of course, I have my private group. You can look into that. If not, obviously, a lot of people have been succeeding from just a YouTube channel. So, there's value all over the place. If you're on a call with me, you're getting value. It is what it is. Okay, and Fritz, Tony said, you illustrated what you were saying. Yeah, okay, Okay, good. For it says it paints the picture from in term of a silver bullet continuation. Candle wick / high setups. The recent high and low. Yeah, I mean you could frame it out like the whole like if you're going to the silver bullet time window and London rallied, and you're looking for prices to go lower, and London is pushing you up into this daily fair value gap on this candle, okay, you're probably going to end up seeing a reversal happen from this daily fair value gap if your narrative is bearish and you're correct, right? So the sell side of the curve may come in New York. The buy side of the curve for a overall sell-off that's happening in a scenario right up in this area, if this was like a daily time frame. Let's make sure that this is this is a daily time frame illustration, and then this is like lower time frame view, so you can kind of get a view of all of it, right? But yeah, the silver bullet could be happening on the sell side of a curve in a daily time frame, daily fair value gap retracement on like a Tuesday or Wednesday, that then leads to a sell-off in New York after London in the previous day was pretty aggressive to the buy side, simply to set us up with a premium price level in a higher time frame retracement, right? Like you could say something like this, right? Like this was a swing high up here, and the price retraced up to a premium on the daily time frame. Going into this candle here, if London was bullish, aggressively bullish, and reached up into this and is showing like a wick behavior, or maybe it closes like this, right? Maybe it closes like this, and London creates this wick like that, right? And then the next day comes, then maybe London rallies up a little bit, and then New York just starts to dump because the higher time frame is bearish. That's how you can kind of, I guess you could set it up in that perspective with the silver bullet, and like layer market maker buy and sell models on top of it. And the silver bullet, just expect that most of the time, the silver bullet's going to take place in the sell side of a market maker sell model, and the buy side of a market maker buy model if you're bullish, right? So yeah, it's cool that you mentioned that, because it's another example of us being able to layer concepts on top of one another, and it's just really dynamic. It's really dynamic. Everything fits very well together. So yeah, let me see. The end of the previous candle sets up the accumulation phase, and the second candle completes the distribution phase. Yeah, so like you could kind of see, like for Power 3, for example, like this is the weekly perspective for a weekly Power 3. Let me see, weekly open. Okay. So if we're thinking weekly Power 3, right, this is the weekly open, right? The first couple candles is accumulation, manipulation. And then the next candles that are on the sell side of the curve are the distribution, right? Accumulation, manipulation, distribution. Do you kind of see how Power 3 and market maker models work together? How sometimes the Power of 3 dynamic, which is universal, when you mix market maker models to whatever Power 3 you're looking at, you can now break down that Power 3 in an even more detailed, effective, dynamic way. You're really reading even deeper, even closer to what price is really doing. And each phase, of course, just like how, each session has its own characteristics inside of a Power 3 delivery, each phase in a market maker model is breaking down in greater detail what's happening inside of those different phases, right? Like you could also look at this as like a maybe what's a good way to put this? I don't want to say that this is like a 15-minute chart, but actually this is a good idea here too for me to break down. So say this is the 15-minute chart, and we're going into New York. Say this is the New York Open, right? And this is the 15-minute chart, right? Let's say that the daily open is potentially up here. Or maybe it's like way up here. And this is the 15-minute chart. We're bearish. Right? When New York Open happens, because London was so aggressive, it's reaching up. Let's say this is like a 15-minute fair value gap. Right? The same stuff can apply to whatever time frame you're applying it to. You have to be understanding what the time frame is and what's happening relative to that time frame. But you can also see it like this, right? It could be like the 15-minute chart. This could be New York Open. Prices rallying up to go lower. So accumulation, manipulation above the New York Open price. Maybe it's too far from New York Open or the overnight open price. And all the same type of stuff applies. Higher to go lower. So if you drop down to the 5-minute, what you're going to be seeing is something like this. Right? If we had like a wick in there. Just open there, rally, boom, boom, boom. Yeah, so you may see something like this taking place. I'm trying to get it to be as accurate as possible with like what the lower time frame would look like within those candles. All right, so if this was like the 15-minute chart and you drop down to the 5-minute or 1-minute, this is the type of delivery you'd be seeing. It's kind of a bit more sloppy than I would have liked it to be, but shit, sometimes it's the way it goes, I guess, right? Oh shit! Just put it back the way it was. Hopefully, you guys get the gist of what I'm saying here. Okay. All right. And so yeah, if this was like the 5-minute chart, or a 15-minute framework, 15-minute fair value gap, or maybe a 1-hour fair value gap. If you drop down to those lower time frames, you'll see that the market maker model idea is happening here again. So all of these phases in here, this whole diagram, would then be applied to the 1-minute chart within this 15-minute retracement to go lower. Does that make sense? Hopefully that makes sense. All right. So yeah, with that being said, so if the bonds are going higher, that's going to push the indices, currencies, commodities higher, DXY lower. If the bonds are going lower, that's going to send them lower. And then DXY does the reverse. The bonds positively correlate with the indices. Just to answer a question in the chat. The bonds correlate with, or impact positive correlation with the indices, foreign currencies, and commodities like gold and silver and whatever. And the yields indicate or influence heavily what the DXY is going to do. So if we're bullish on the NASDAQ, we want the bonds to go higher, yields to go lower, because then that'll send the bonds higher, or that'll send the indices higher, DXY lower. And then if we're bearish on the indices, we want the bonds to be bearish and the yields to be bullish, because that'll send DXY higher, indices lower. So yeah, that is hopefully in a nutshell an answer to your question, brother. Makes sense, helps a lot. Okay, I'm glad that it makes sense. I've been trying my best to like keep it not overly complex, because this is a concept that people overcomplicate. I mean, it's not like, kindergarten level, right? Like you have to kind of have some experience a little bit, right? Or at least understand the phases, or have seen it before. But hopefully this, for those of you that haven't really dug deeply into this just yet. Hopefully this has made at least a little bit of sense, at least enough to kind of get the idea that I'm trying to point out to you. Whether this is a daily, whether it's a daily retracement or a 15-minute retracement to go lower for New York session, the same stuff applies, right? If it's the 15-minute, if it's a 15-minute retracement like this, you'll have a 5-minute, 1-minute market maker sell model, or market maker model in general, if it's a 15-minute setup. If it's the daily chart, like a daily retracement, a retracement to go lower on that daily chart to a fair value gap, you'll have a 1-hour market maker sell model, or 15-minute that you could break it down in. Maybe a 4-hour possibly, because sometimes it'll show the signature, but more so from like a daily to a 1-hour, you'll absolutely see what's happening with the market maker models all throughout the week, right? So 15-minute, 5-minute market maker buy or sell model, daily retracement. You look at a 1-hour or 4-hour market maker buy or sell model. If it's like a monthly retracement, you may see a market maker buy or sell model on the daily chart. And you do the same thing as you go all the way down to the 1-minute chart. And you can start to see how many frameworks for market maker models are unfolding. Okay? So yeah, hopefully that makes sense. And with that being said, we will, like I promised, jump straight to the indices now. I'm going to skip over the currencies. So, like, who really cares about the currencies at the moment? If DXY is doing one thing, we already know what the currency should do. Okay. But yeah, let me see. Oh, damn it! I shouldn't have did. I wish they had an eraser. I don't know why they don't have an eraser. Do they have an eraser? No, of course not. That's so dumb. Come on, TradingView. You have a drawing tool, but not an eraser. Oh, whatever. I'll just erase all of it. Oh, wait. Actually, let me pull that up. So, yeah, throw one in the chat if it made sense. Fritz, I'm glad it made sense. Let me know if it makes sense to all of you guys. Hopefully everything that we've talked about has made sense. Is what I assume going to happen on the DXY, does that all make sense too? Bonds and yields, right? We've already kind of talked about that. And then, of course, we got the DXY. In a nutshell, this run above the high, we're retracing down into here, hitting this fair value gap. Let's see if it can set up a market maker buy model. If not, if it fails to do so and we displace below this and get down into this level, my attention goes down to the low here. Where is that? Basically, it's down here. So we'll see, right? We do have a decent amount of price delivery it has to break through first in order to get down there. And then, of course, once the deeper we go, we also have this bullish order block in the wick quadrants we'll have to continue to watch. But nonetheless, if we get down to this level in here, which is somewhere in this level, we may be able to see that act as a market maker sell model and then target the lows. And of course, that would be bullish for the indices. If not, right, if we hold this, again, my attention is on trying to see if we can get back to these highs until proven otherwise, because order flow is bullish, order blocks holding, wicks holding, fair value gaps holding, higher levels to the upside being violated, strong response, but again, external range to internal range, that doesn't really upset the likelihood that price is probably going to keep going to the buy side until proven otherwise. All right. So yeah, that's my quick down dirty opinion on the DXY. Now let's move you beautiful people to the indices, kind of see what's going on. So I talked about, I think, was it last week? Or no, this was the week that just passed. So I talked about this order block. I said that when price started to decline into that, does this look bearish to you overall? It doesn't not yet. Okay, we still need certain things to unfold. Bullish PD arrays are still holding price, so we may see it change, especially if DXY continues to rally. I think we do have SMT above. We do got SMT at these highs up here, if I'm not mistaken. Yeah, we had it right there. And then that's led to this pretty rapid decline off the heels of a very powerfully bullish DXY. So we have pretty much solidly declined. I don't necessarily like when massive wicks happen. That's not confidence boosting whatsoever, especially when the weekly chart just simply looks like they were traced to a higher time frame PD array. And if this was the 5-minute chart, I would not be overwhelmingly bearish until it took out this low. Because then we'd have one PD array, two PD arrays, and then a third PD array being violated, fourth PD array with this volume imbalance. Every volume imbalance is a new week opening gap as well. So, well, pretty much either a new week opening gap or a new day opening gap, right? So if we get down below this low, overall, we will end up being bearish, and my attention long term, if that was to be the case, would jump to this fair value gap that I mentioned. I mentioned this when we were up here going into the rate cut in September. I wanted to see if we can get down there first, hit that, sweep these lows out, then look to rally. But of course, it's too overwhelmingly bullish as a result of the rate cuts that are super positive for the indices when we're at all-time highs. Okay. So again, unless something dramatic happens, yes, we've seen a decline because of the shutdown. Yes, we've seen all this negative stuff coming out, which is, and then of course the government shutdown has stopped commerce, government-funded commerce, which should have never been the case anyway. It should have never even been going out to people that can go get a job. But you know, kind of is what it is. And now we see the result. The longer the shutdown goes on, the more deadly it's going to get for certain things. Air traffic is probably going to slow down. That'll have an impact on the economy because, you know, flying is a pretty profitable thing. The government also subsidizes a lot of stuff related to that. So again, all that stuff has kind of triggered this retracement. But the retracement made sense because of the what is that? The fractal, right? The fractal high, like I talked about here on the DXY. Fractal high forms the next 1 to 2 days can be expected to retrace to a logical PD array. Same thing with this, right? Fractal high formed the next 1 to 2 days would reasonably be anticipated to target a PD array that may send price higher again. We have been seeing some pretty aggressive price delivery that has smashed through a lot of this. I literally walked this entire move lower. You know, one of my, I wouldn't even say a student, one of my peers, right? Well, someone I basically started with, Byron, right? Shout out Byron. I'm going to bring him on and do some live calls at some point. But he basically caught this huge short, and we all kind of navigated it. And yeah, this liquidity void, this is important to identify because there's a difference between liquidity voids and fair value gaps and volume imbalances. You see how there's a void of liquidity in here? There's not even a wick. So that is a liquidity void. So what happened when price got down into that? Well, it overtook it. So there's sell side offered. And then we had buy side overtook it, right? Overlapped both extremes. And then what happened? Price came back down below it, creating a balanced price range, using that liquidity void as a speed bump on its way to targeting the lows down here, unseating all these people that made money off of this decline that went higher. They've all now been unseated. We're also at a higher time frame bullish PD array, so we'll see what happens, right? Again, it needs to break down below the 50% of this weekly order block for me to really start to think that something is going to end up targeting the lows down here, or something's going to happen to the bullishness. We're just going to have to see, because again, the shutdown It's going to have an impact. I wouldn't be surprised if it does lead to this low getting taken out. We have seen a lot of early signs. Those early signs being the run higher here, followed by a sell side delivery that has now balanced all of this price delivery. If we come back up here, this liquidity void is probably going to be utilized once more. But we'll see what happens in that regard. We're below the new week opening gap too. But yeah, hopefully this liquidity void idea, hopefully that makes sense. Because most people have no idea what the hell a liquidity void is. They think it's a fair value gap, and it's not. Just tells you that they don't know what the hell they're talking about. So yeah, now you guys know what a real liquidity void actually is. It's a void of liquidity, right? A place in price where it's void of liquidity, meaning there's no orders at all, not even a wick. So what did they do when they got it? What did they do when they got in there? They traded both sides, and they got a little overzealous and ended up declining even further. But from a weekly perspective, this was simply a retracement to the order block, and it's still kind of holding up, right? So, and then again, we have the 50% level in here. Did it retrace exactly? Wow, look at that. Perfectly to the 50% of that order block. Isn't that beautiful? That's pretty freaking beautiful if you ask me. Weekly wick. Yeah, that was pretty damn beautiful. I didn't even realize that. Kind of just paid more attention to this low, but man, oh man. That was beautiful. So yeah, we'll see if that continues. This big wick doesn't really make me too confident that it's going to break down, but we'll see. We do have, one order block taken. We have multiple levels that have been overtaken. Another order block was created. We'll see how it gets respected going into the week here. So this is what I'm going to be paying attention to in here. All right, we'll look at this wick in here. We'll pull up this daily wick measurement right there. So we'll see how it wants to treat this. Right? Remember the order flow things I was mentioning earlier. For those that weren't here, I encourage you to watch the start of this video. We talked about a lot of powerful things leading up to where we're at right now. But the order flow ideas, right? You'll see that if this wick gets respected, right? Say it opens up from here, rallies up. Maybe we get something that happens like this, right? Maybe it goes up like this. Okay, maybe it does something like this. And then looks to give us a pretty aggressive delivery lower. Or not, right? It could go slow and then target the wick quadrants. But we're going to see how this behaves in this. This is what I'm going to be watching. If we get back above this liquidity void, we're set to create this as a market maker buy model. If not, and we continue to drop, this run higher to go lower will be looked at as a market maker sell model framework to then target the lows down here. I'm believing, at least for the time being, until I can verify if this is going to hold or not, we're still somewhat respecting the weekly bullish order block. So opening up for this week, I'm going to observe how this wick is going to be treated. If we can't get back into this wick, the fact that we broke this low, the order block here, the fact that we basically went higher and now went lower, if this wick does not even get traded back into, that is heavily bearish. And we will, in fact, see these equal lows get taken out. This low, first and foremost, get targeted because it's Friday's low. But they may look to open up, maybe wick above this Friday's high, take that, respect the 50% of this wick and then decline. Or if they open up, break up to the buy side and then get above the 50% of this, above the liquidity void, that'll set us up with a market maker buy model scenario. Okay? So this is what we're going to be watching. Higher time frame wise, we're not done with bullishness yet. DXY is rapidly repricing to the buy side. We'll see how the response is from here to determine where the DXY is going to go and how it uses these levels. And then we'll see how that impacts or has an influence on the NASDAQ and the other indices. Okay, and if we just jump here, above this order block, there's a regular trading hours gap up here. Okay, like if we drop down to like the 1 hour, let me show you. So we have a massive gap wait a minute. Where the hell is the candle? This thing is glitching. There's one more candle that provides the wick right here, because like when we take this regular trading hours off, regular trading hours gap off, there's a candle there. See that? So yeah, from this candle's low to this candle's low also, right? We can pretty much see there's a gap there. I didn't put this box all the way up to that candle because we already have some trading down into that. There's already a low there, so we've already kind of filled in some of that. So the available gap down below is from this low, the close, to the low here. So that's all inefficient. All right, so if we are going to continue to drop, right, and it isn't going to respect this bearish order block to go lower on that daily chart, we will end up seeing this regular trading hours gap up here get targeted. Let me just drop down one more time to that 1 hour so I could show you, right? Here's the gap up here. So if this turns into a market maker buy model by failing to respect that daily bearish order block, the daily wick that I just highlighted to you guys, then we will, we'll see it get up and go higher. If it respects that order block in the wick or can't even get to it, right, it opens up and just starts tanking, then again, my attention will be down here at this gap, coupled with the lows that I've just shown you guys, okay? I'm more of the opinion, at least for now, until we close down below the 50% of this weekly bullish order block, that this is all just a retracement to go higher, right? So that's going to be where my focus is going to start at. But again, if we have to adjust because it looks like it wants to fail to deliver that from this bullish order block, then of course we have our contingency plan to then target the gap down there, right? So, but I would prefer, like I said, to see this sweep, this weekly bullish order block, to continue to push us to the buy side until proven otherwise. And then of course, we'll watch and see what the DXY does, and we'll study what the yields are going to do. We'll see if the yields can hold and go higher. If the yields hold this same order block, right, and go higher, again, that just further reinforces the fact that this was all a stop raid just to reach into the weekly bullish order block to go higher. So that's why, that's the why behind why I'm going to just stick to, observing if this is going to hold or not. Kind of favor buy side delivery, targeting the gap up here from the regular trading hours gap. But of course, if this wick and this bearish order block holds, or we can't even get up there and we start ripping to the downside, I have no problem using the contingency plan and targeting the gap down here, these relative equal lows, because it just makes sense. Okay? So yeah. So with that being said, it is CPI week. Hopefully we get CPI. Hopefully everyone can agree on something and open the government. But if they can't, it is what it is. We'll still be able to do something and make sense of the chaos, as we always do. One thing I do want to point out here too, in terms of observation, we do see that we have this fair value gap. It's kind of been overtaken, so we definitely want to watch how that's going to behave. And again, we do have this in here to watch as far as the daily wick is concerned, the one that we talked about a second ago. And if it was to get up above this candle, that creates a 8-hour order block. So again, we'd have to watch that. If it gets above that, you want to observe this as a balanced price range, right? And sell side taken, buy side taken. So then you got your new dealing range. Once we get above that, and we'll see if this order block can hold or not And depending on if this order block holds or not, depending on if this wick holds or not, that's going to determine whether our bullish overall narrative is going to continue, or if we're having a complete shift that's going to end up targeting these lower levels. Okay, but watch this to start the week. Watch what I mentioned here on this higher time frame. And if we get up above here, again, we have that gap up there, so that'll end up being the target. And again, if that fails, if this wick holds, this order block holds, we'll target the contingency sell side liquidity, which is at the gap in these relative equal lows. All right. So yeah, I think I covered all bases that I wanted to cover today. Let me read the chat. The confidence in the dollar really affected by the shutdown. Yeah, the confidence in the dollar is affected by so much BS that our stupid government has done over the last 30 years. All the inflation, all the political nonsense that's taking place, all the hatred for each other, all of that nonsense and instability it's really applying pressure to the dollar. We already have our enemies trying to dethrone us and have their own reserve currency. We'll see. So all of that stuff's kind of affecting things probably more than the shutdown. But yeah, the shutdown here in the moment, that's definitely affecting people's confidence in the dollar, because all the other countries are looking at America like these people can't figure out what the fuck they're doing. Like they can't figure out how to get along, right? Like they can't do things for the people. They got to sit and fight all the time. And now one side's trying to kill the other. I mean, if I was another country, I'd be losing my confidence too. But hopefully that changes. All they got to do is just stop giving away our money, and the government will be open. But one side thinks that they have to give all the money out that we don't have. $38 trillion in debt later, they still can't figure out that overspending money is not the greatest idea. Okay, money that's not even theirs to buy votes. It's just stupid. But yeah, we'll see. But yeah, that's definitely something that's affecting the confidence because of those factors. Let me see. Tony said one futures trader made 1.5 million in 3 days off the same move. Yeah, I wouldn't doubt it. Okay, remember, all this stuff is scalable. Yeah, that's why you don't need to worry about things right now, right? If you're not where you want to be financially, just get this skill set, save up as much money as you can, attack the funded accounts, get 2 or 3 jobs if you have to, and once you have the skill set, once you have the money to put in, I mean, you'd be very surprised what you can do in 90 days, let alone a year. Once you arrive with the skill set, and hopefully I'm getting you guys closer and closer and closer to that point. All right, so I guess that about does it. Chewezi says, sorry, I went offline. I was helping my dad with something, and I had another question, but I'm going to ask you. I've seen those videos. There was a level, immediate rebalance. Yeah, immediate rebalance. So an immediate rebalance is when price does something like this. Let me see, let me see if I can find an actual example. So this is an immediate rebalance. Right? Price has a displacement. The next candle opens up, immediately closes in the rest of it, and then it's very sensitive off of that. Especially if you can see this type of thing happening coupled with another PD array like an order block after a stop hunt. This is essentially what an immediate rebalance looks like. The next candle immediately rebalances the previous, and then it accelerates. And of course, everything on the daily chart can still be applied on the lower time frame too. October 30th, let me see. Yeah, so this is not at all immediate rebalance. It has to do with like a displacement, and then the next candle immediately rebalances the whole previous candle, and then it just accelerates because that's a very sensitive type of delivery. So October 30th. Yeah, I mean, that was immediate rebalance, but it wasn't necessarily an entire immediate rebalance. It didn't fully rebalance it. Wait, you said 30th or 31st? More so, it's the 30th that really presented the immediate rebalance. It completely fills it in, immediately rebalances the whole thing. This is not fully rebalanced. That's why look at what it did. It came right to that level because it's inefficient. So it came right into it. If it was an immediate rebalance, it wouldn't have came probably right back to it like this. Unless, of course, it was going to turn around and something was happening that reverses price. But yeah, it's going to be very interesting what's going to happen moving forward. Appreciate the question, brother. My job cut hours. Honestly, it's perfect for me to continue success and time with family. Yeah, it's a good way to look at it, Tony. Turn every lemon into lemonade, bro. No matter what, just got to do what you got to do. Once you have the skill set, it won't be able to be taken from you. So even if you can't really do much right now, what's most important for everybody when you first start trading, what we should be focused on is learning, right? Because a lot of us jump into money too quickly. I'm not talking about you, Tony. Obviously, you're doing very phenomenal. Just in general, right? We put a lot of pressure on ourselves at first, when in reality, the pressure should be on how can I make time to study? When can I study? How many charts can I knock out in terms of quality backtesting in a month, in a week, right? Volume isn't necessarily better than a quality example. Like if you go in and look for one daily chart example, like this fair value gap retracement here. I mean, think about the stuff that I just talked about market maker buy and sell models. Take that understanding and look at this run on stops, pull up into the fair value gap, right? So displacement leading to a retracement that may continue to drop, right? And go in there and mine all the different things. You can get one example, one quality example, breaking down things so much so you understand everything that you're looking at, finding all the different elements and components that you've learned is better than half-assing a million examples of screenshots just to say we screenshotted a million examples. So it's always quality over quantity in your study, just like it's quality over quantity in your execution. Right? So make sure you guys keep that in mind. And learning is, focus on learning. I know you guys have been learning a lot lately, so hopefully you guys continue to do that. Hopefully everyone has or doesn't have any crazy things that pop up. I know that the world's kind of on edge in a lot of parts of the world. But I hope that, where you guys are at, none of that type of stuff is going down. Look at this beautiful retracement after taking external range liquidity to internal range liquidity. Now we're inside this, so think about it. This is going to drop down to this low. What do you think my opinion is just by looking at this retracement higher to possibly go lower? What is in my mind when I'm looking at that right now? Let me know in the chat. Then once we get that answer, we'll put a ribbon on it. Sell model. Bang, ding, ding, ding. Every bullish candle that was delivering up to this fair value gap, what would we be thinking on those days? The run higher bullish to attack this fair value gap. What would I be thinking about that candle? All right, bullish power 3, but what should we be thinking relative to what we've been talking about today? Would that be what would it be? Or what would we look at? Or what would we be looking for or thinking about within this bullish candle delivering here, aside from the sell model? Just let me know in the chat real quick. Let me know in the chat. Should go higher than the midpoint of the fair value gap. Okay, so relative to the pattern you drew, yeah. So each bullish candle, if we're thinking price is going to go higher, and this is like the daily candle, right? Each daily candle, if it's going higher, think market maker buy model, right? Because everything going higher to go lower is creating a sell model. But while it's going higher, remember those little phases, right? It's presenting you with smaller market maker buy models as we approach the level we're targeting to go lower. So I'm kind of painting a picture of how dynamic market maker models are and how you can also use it for counter trend trading. Because every single day, every moment of every second in price delivery, we're inside of a market maker model of some kind. So in a bullish daily candle, think market maker buy model, think bullish power 3. A bearish down candle, market maker sell model, bearish power 3. Right? And understanding the different elements of that, it makes things a lot more clear, right? Aside from all the other stuff that we've talked about and we'll continue to talk about, okay? The pattern I drew, yeah, definitely. Rejecting the highs, yeah, exactly. Yeah, so we'll see what happens. Because this retraces, another good thing before I let you guys go. When price does this, like we're coming off of a week that declined and then set up the retracement, right, with it, and we're in a level that could reasonably be looked at as a level that could decline or just start a move without, like basically it did the retracement into the level that we would like to expect. Going into the new week, we may open up, maybe wick a little bit into this, fail to break the 50% of that wick, and then decline aggressively, which is what I would expect. And the manipulation would be pretty small. I wouldn't be expecting a crazy manipulation in this type of scenario, assuming that it's going to keep going lower, right? We could be wrong. But assuming that we're not wrong and we're going to be correct that it's going to go lower, if DXY goes higher, we will anticipate a light manipulation this week. Given the news schedule, and the time of year, that's ideally what we want to see, right? Maybe an opening wick a little bit into the wick here, stay inside of this gap, and then start to decline once we're above the open for a little bit, and the push down below that. It may not, though. It may go sideways because of the lack of news, especially if the CPI doesn't come out. But even if we're in consolidation, market maker models thrive in consolidation. Because if we're going back and forth, right, if it's going like this, right, you got to think. Does that make sense? In a consolidation, this is what you want to think about, right? Hopefully this is clear enough. This should spark a light bulb in your head, hopefully. I know it did for me. This is the exact diagram that one of my mentors gave me. I was like, what the hell? What does that mean? take this and go into the chart and look at a consolidation, and you will be starstruck, let me tell you. But yeah, so with that being said, I think we covered a lot of bases today. Talked about a little bit more than I wanted to about certain topics, but hey, market maker models, you can never talk enough about them. They're so amazing. And hopefully the analysis has made sense with the bonds and yields, right? Let's see if the bonds can hold this order block, and see if it can go higher. If not, right, we'll determine that going a little bit into the week. We should see if this gets held up here and goes lower, that'll be bearish DXY. But if it continues overlapping this stuff, we'll see if it gets inverted or respects it, and then we'll make a determination. So we're kind of in a mode of waiting to see the response from here. DXY, we're going to see if we can get this response here to go higher. It looks like it's still going to go higher. If it goes higher, we'll think market maker buy model. That's ideally what I'd like to see, because it's just a retracement. But we have to get the yields to rally up if that's going to be the case in a trustworthy long-term fashion, or at least like a month-to-month basis. It may not, though. It may just hang around equilibrium, because that's where we're at right now. So we got to see what the response is going to be, and then we'll trade the response after. Okay. So with that being said, we'll look at this as well. We didn't really dig too deeply into the currencies, but I just kind of gave it away, right? We'll see if we can retrace into this like we have and get a response from here to try to go lower. Think market maker sell model. And then, of course, the indices. We'll see how we treat this weekly order block that's been traded into. It's also a daily bullish order block, 50% level. We just purged out significant lows. So we'll see if we can get this to turn to an inversion and continue to go higher. But of course, we have to watch and see what this daily wick is going to do, and also how we're going to respect this area along with the liquidity void that's up here too, which is simply just an area where there's not even a wick or a body on either side. And we'll see what price wants to do with it. Right, if it gets above it, again, market maker buy model. If we continue to decline, we'll think market maker sell model. And then our contingency target, if buy side does not work out, and say it breaks down below this low, or really responds bearish from that daily order block and the daily wick that's bearish, we'll then target these equal lows here and this gap that was left available from here. Okay. So yeah, in a nutshell, that's everything that we've covered today, aside from the market maker model breakdown. So hopefully you guys have gotten value from today. Definitely let me know if you guys have any questions. And yeah, I'll do my best to get back to you. Don't forget to like the video, subscribe to the channel. I do have a private group for those of you that feel you need more one-on-one, like a mentorship or an apprenticeship type of experience. It's definitely something we offer. I have a free Discord as well. If you're not part of that, definitely go join that. And DM me if you guys have any questions about either one of those. And as always, hope you guys have a good rest of your weekend. God bless. We'll be live again here on YouTube on maybe Wednesday. I'll probably go live on Thursday, depending on what happens. But I don't want to trade on a day before, day of, or day after a holiday, right? So when we go live, I'll try to get you guys in front of Thursday. And then we'll have a call depending on what happens. They're probably going to toss news events in to, kind of compensate for this. Doesn't mean there's not going to be a response, right? There may not be any news, but you better believe they'll use that as an excuse to blindside you. So all the more reason for you to be more cautious and don't do anything stupid, okay? 1 to 2 trades a day, half risk until February, and, slow and steady, right? So, yeah, with that being said, God bless you guys. Thanks again for always supporting the channel. It means a lot. Hopefully you guys got value. Let me know if you have any questions, and I will see you beautiful people here on YouTube on probably Thursday. And those of you in my private group, I will see you guys either later today or tomorrow morning. All right. So yeah, God bless you guys. Talk to you later.